my name is Nadia Adila and I'm from the group of GBA 114B. So, in these videos, I'm going to share to all of you about defensive stock and income stock. But before that, have you heard about these two stocks? If you don't, then this video is perfect for you to watch. Hope you enjoyed the video.
Defensive stock versus income stock. But before that, what is common stock? Okay, common stock is a security that represents ownership of corporation in a company. People who invest in common stock usually they have right to vote, they also have right to share their profits, and they can vote for the director of the company. Now we're moving on to the types of common stock. There is 7 types of common stock in total, but in this video I will only focusing on 2 types of common stock, which is defensive stock and income stock. I will explain it to you guys in more details in these 2 stocks. Okay, firstly, defensive stock. Defensive stock is a stock that provides consistent dividends and stable earnings regardless of the state of the overall stock market. This is because there is constant demand for their product. So, defensive stock tend to be more stable during the various phases of business cycle. Also, there are important information that you guys need to know where defensive stock are also less likely to face bankruptcy because of their relative strength during downturn. Also, defensive stock should not be confused with defense stock because defense stock manufacture things like weapons. Food and beverage, healthcare, and utilities are the example of defensive stock. Next, the advantages of defensive stock. Firstly, defensive stock offer long-term gains with lower risk than other stocks. It also have the potential to protect investors' capital during a slowdown. Therefore, if you invest in defensive stock, you are less likely to be affected by what happens in the country's economy. Yes, of course the defensive stock will decrease during recession, but the impact will not much lower compared to the rest of the market. And lastly, it offers higher dividend yields. Why it offers higher dividend yields than average dividend yields? Because the companies pay out most of their earnings to shareholders. Next, disadvantages of defensive stock. It has low volatility for an investor with high risk aversion. A non-volatile defensive stock is not considered an attractive opportunity. Yes, it's very sure it might offer him some insurance during bad times, but the defensive stocks would not bring explosive profit in a short time. Okay, that's all for defensive stock. Now, we're moving on to the next stock, which is income stock. What is income stock? Income stock is an equity security that will pay regularly income and often steadily increasing dividends. Also, income stock have limited growth options, thereby it required a lower level of ongoing capital investment. Bank, transportation, and utilities are the example of income stock because the business are stable. Also, income stock offer high dividend yield and low volatility. Moreover, income stock can come from any industry, but investors commonly find them within real estate through REITs, energy sector, natural resource, and financial institution. Next, the advantages of income stock. Firstly, it has low risk, where income stocks entail much lower risk compared to other types of equity securities. Secondly, low capital appreciation. Market fluctuations affect income stocks with intensity lower compared to other stocks. Therefore, the price appreciation factor is relatively limited in this case. Lastly, disadvantages of income stock. Income stocks sensitive to interest. Income stocks values are sensitive to changes in interest rates offered on fixed income securities, especially bonds. Investors readily shift to fixed income securities if they offer a higher rate of interest.
Okay, that's all for defensive stock and income stock. But before we come to the end of this video, let me tell you which stock do I prefer, whether defensive stock or income stock. Well, I would go for defensive stock. Why? Because defensive stock will remain stable or even rise during economy downturn. Thus, during difficult period of business cycle, the price of defensive stock tend to be more stable compared to the market average. Okay, that's all from me. Thank you for watching and don't forget to click the like button. Bye bye.